Great. So welcome to the Legacy Blueprint. I'm your host, Joe Evangelisti. I'm excited to welcome our next guest interview today, Mark Ritter. Mark, tell us a little bit about yourself, man.
So I am the CEO of MBFS, which usually doesn't mean anything to people. So I tell them what I do is I'm the CEO of a credit union-owned company that helps businesses get loans from credit unions, and credit unions make loans to their members in the community.
Love it. Love it. We were actually talking offline a little bit before we hit record here. And, I was mentioning I do a lot of, real estate transactions. I think one of my best and favorite loans in recent history was from a credit union. And at the time, as many loans as I've done before that, I never knew credit unions lent to businesses before we got involved in that loan. Is that something you find a lot when you're talking to people in the real estate space?
That's the bane of my existence. There's 100 million people in America that belong to a credit union.
Yep.
And we are still an unknown commodity. People really love their credit union, but we try to get the word out that they can use their credit union to help them with their business and real estate investment needs.
Yeah, it's amazing. I mean, and you're right. I've been a member of Navy Federal Credit Union now for 20 some years, since I was in the military, since I first joined up, and never even realized they did business, transactions. And then of course I got involved in this other credit union. So it's just interesting to me. Maybe you could tell the folks what makes a credit union separate from a bank? Like what makes you guys stand out?
Well, I always say, when you walk into your local credit union branch and you see their teller line and the ATM and the loan officers, people say, boy, this looks pretty similar to my local bank and Wells Fargo and all these other mega banks. But really what makes the difference is just like your experiences when you talk to the people and the underlying structure. What a credit union is a cooperative financial institution. It is owned by the people who have accounts there and run for the benefit of the people who have accounts there or who would like to have accounts there. The management and oversight of a credit union is elected by the membership to be on the board of directors. So much like other cooperative financial institutions, it's really done for the benefit of the people, by the people.
That's awesome. And so is there special things, terms, I wouldn't say terms, probably the wrong terminology, but are there things that you can do that a traditional bank can't do, or is there relationship, based stuff that's different than a traditional bank?
One of the niches that we have is we can't and don't charge prepayment penalties on any loans. We really like to tout that. Now that rates have dropped, sometimes it's not in our favor, the credit union's favor as much because rates are getting renegotiated down. But that's good for the business and good for the customer. So one of the keys is that I always talk about credit unions is access to decision makers and the process. You are much more connected to the loan lending process for your business or real estate than typically in a commercial bank. My money, my dollar is the same as a bank's dollar. If I charge 5%, that's the same 5%. But really, we try to be much, much more friendly on fees and terms and help people through the process. And credit unions also work together. So if we can't help you, many times we'll try to find maybe a credit union that can, or an organization that can fit what you're trying to do.
I love that. I mean, and I think that alone is kind of a unique approach. You're not hearing a lot of banks. You're not going into Wells Fargo and they say, if we can't help you, we're going to turn you on to TD Bank.
Nobody's protesting in the streets against their local credit union.
Yeah, it's amazing, right? So, I noticed when we were talking earlier, and I noticed on when you were introduced to me that you do some SBA stuff as well. And I think that's, for people that are watching or listening to this podcast, we have a lot of young entrepreneurs that are coming up that are always looking for ways to get ahead. And these are folks that generally the listeners of our show, these are hard workers. These are folks that are going after, creating real businesses and, I don't know that they know that they have leverage available to them. And maybe you find that as well. Can you talk about those type of things a little bit?
Sure. A lot of people get very intimidated with the lending process. And, the biggest mistake that I see people make is automatically go to some hard money, quick, fast, cheap. You get your money quick overnight, but maybe you're paying 20% and it's really sucking the profits out of your business.
Absolutely.
And really, there's a lot of options out there. Just because some bank says no or they offer you this product, there are a lot of community-based financial institutions that want to help people succeed. And SBA loans are a great program. They used to be a nightmare. Yeah. But the SBA has really become the friendliest government agency there is today. They are, and more importantly, one of the big shifts is they are now actively promoting smaller community-based financial institutions like credit unions to become involved in the program. And our credit unions are embracing it because it's good for the community, it's good for the business, and it's a really nice relationship. And it helps get people the financing that they might not otherwise in better terms, more money, more capital, rates, terms, conditions to get you over the hump of maybe that first business. Or if your business has matured and you want an expansion, that's a great way to do it as well.
I love it. You said a couple things there that are really, really key, kind of like almost brought me back a little bit, right? And again, these are things that I think are so important to young entrepreneurs. Number one is we've always, tend to use community banks. Sometimes you don't realize you go to your big bank, maybe you bank with I hate to keep saying, I don't want to throw Wells Fargo on the bus because we bank with them, but you keep going to the bigger banks and maybe you get turned down. But what you don't realize is you got to shop that deal or shop that product to a lot of local banks, your community banks, your credit unions. A lot of times their rates, their terms, their approval process is going to be different. And, you gotta kiss a lot of frogs. You got to put that product. So I think a lot of people they get turned down once or twice and they start to take it personally, and they think like, oh well, this isn't going to work, this deal's not going to work, and they do turn to private money right away, which I'm a big advocate of. I'm not going to hide behind it. We deal with a lot of private money, but it's got to be done in a safe way where you leverage private and then you convert to long-term fixed lower rate financing. You got to have both in play, guys. And if you're watching this, you got to make sure you make those local connections with your community banks. It's super important. But just because you get turned down once doesn't mean you shouldn't continue to go after it and continue to talk to people like Mark and his team about finding ways to get approved, because a lot of times just because one bank says no doesn't mean the next bank, it doesn't have a different underwriting process, Mark, right? I mean, do you agree with that?
I always say choosing a financial institution for your business, and business is like a restaurant. Mm-hmm. You can go to McDonald's, you can go to the hot dog stand outside the fairgrounds, or you can go to Ruth's Chris. Mm-hmm. They're all restaurants that are feeding you. You really have to fit and find the solution that gets what you want, how you want it, at a price that makes sense. Yeah. People tend to lump financial institutions and hard money and different lending options all together in one big pot. But it's not a homogenous industry, even though much like a restaurant, we're all giving you food, we're all giving you money, but you really have to find that culture that fits your business and makes sense. And like you said, maybe there's a stepping stone for doing private money, a little bit harder money, but you want that plan to eventually get the cheaper money. And we love to work with people who go through that process. Yeah. Of you're ready to mature. Maybe you have that project that you started. Now you want to term out and get some permanent financing. That's great. We love to work with you.
What would you recommend for someone who hasn't established that relationship yet, in terms of helping them be successful with coming in, to be prepared, to understand what to expect when they get there and have their best chance of getting approved, kind of get their ducks in a row?
I always tell people, understand your business as good as us. Learn to be a little bit of a credit analyst. And if there's some rough spots in your business, we're going to eventually find them out and ask the questions. So we love it if people can explain the numbers. I'm more of a person that says, I don't want to see the numbers. I want to understand the numbers and know what's going on in your business. If you're a snowplow business and it didn't snow last year, let's understand that, because it's eventually going to snow.
Yeah.
And just let's go through and understand your numbers so I can make the case to get you the financing that you need, rather than just you hand me some tax returns and move on. We want to hear the story. We want to hear how it's working, your business, your plans, what's the big picture, as opposed to just putting something through an automated underwriting process.
It's a great example you're making too, because a lot of people, I think they get self-conscious about, well, I had a bad month or I had a bad quarter. If you have a functioning business and you have a great relationship with your bank and they understand what's going on, listen, your tax returns don't tell all the story a lot of the times, right? So trying to understand the functionality of it. And if you're prepared ahead of time, what the banker is looking for. If you're in the real estate space and after appraised value and your debt coverage ratios and all those things going into a deal, and you can explain that deal to the banker ahead of time. They know you're more knowledgeable. Guys, a lot of times they have to sell that deal to other people. They have to sell the deal to the board, or they sell the deal to the underwriter. So knowing your deal just as good as they are supposed to know your deal to be able to lend you that money is super important. So know your numbers and understand it really, really well.
We lend money, and especially credit unions lend money to people.
Yeah.
And we want to lend money to people in relationships that we have a comfort level with.
So the flip side of that question is, now that they know how to kind of be successful, what do you see the biggest pitfalls? What do you think are the biggest mistakes that people make when they come, looking for a loan and, they maybe get turned down?
They take it emotionally and sometimes don't listen to that feedback. We love to talk through and show people the numbers on where they're at and say, what are we missing? It's a pretty simple formula. Let's look at this. We can tell you where we're doing. And your financial institution likes to lend money, and it's a profitable venture. It's good for the relationship. So they're trying to say yes. So listen to that feedback and overcome those obstacles. And sometimes it's not a simple flip of a switch. Sometimes there's adjustments you want to make and take that to heart. And also the biggest mistake that I see is looking and, as I mentioned, not shopping at the right restaurant. Look for somebody who has the culture and maybe makes loans to other people like you. There are banks that only lend to high net worth, private banking individuals. They're looking for doctors who have the practice and a 7-figure income. If you have an auto body shop, you can't just walk in and get the loan. It's not their business. So really talk to other people like yourself and who's lending money in your community and who do you have a good relationship with. For example, you said you have a Navy Federal Credit Union membership for 20 years. Navy has a great lending program, and we look at those relationships. And we say, if somebody's had a great relationship for 20 years, I'm going to go out a little bit farther on that relationship than I would somebody just walking off the street who's just walking from place to place to place trying to get the money.
Yeah. Yeah, that's just some awesome points. And I think your initial point, which is I think it's so obvious, but people miss it all the time, is you're dealing with people who get paid to lend money, right? Like people come in there almost with like hat in hand, like concerned, what am I going to do, to get this loan? And the point is, if you're doing the right thing and you have a great functioning business and you need the money for a function that's going to help you potentially make more money, and it's the right type of loan, then you really shouldn't be concerned. You should be more, confident of the deal you have and understand that the bank is there to make money by lending you money. They're looking for good people to put it in play. And I think a lot of times that confidence, is worth as much as the rest of the package as well. So I love that, that answer. So Mark, I don't want to take up a ton of your time. I have a couple kind of off the wall questions. Number one, you know that this is the Legacy Blueprint podcast, so we'd love to talk about legacy. I'd love to ask you what your feeling is on that word legacy. It's starting to become a hype word in the industry right now, and you're hearing it a lot. But we talk about living a legacy and leaving a legacy. What does that kind of how does that resonate with you?
That all boils down to one piece from my background. And really, I look to make an impact. Make an impact in your community. Make an impact with your family. Make an impact to those around you. As you progress in life, you want people look to help other people, and that everything else takes care of itself. Look to help those other entrepreneurs. I grew up in a blue-collar, coal region, Northeast Pennsylvania background, and was fortunate to catch some breaks in life, and that's why I'm talking to you today. 1 or 2 days didn't go quite as planned, and I could be working, doing who knows what back in Northeast Pennsylvania. So I appreciate that, and I look to help other people. I look to help young college students, or that guy looking for that first break. I look for energy, and really, I had people who were fortunate enough to help me kind of make that first step and kind of get the ball rolling. And I really try to make an impact and help other people get that leg up, just like I had.
Love it, man. What a great answer. No, none of us are an island, right? We all, no one's self-made, and, there's always got to be someone there to give you a little bit of a boost. And I love that. So, looking for people to give that a little bit of an impact too, and leave that legacy behind. That's amazing. I love that. So, kind of another off the wall question. You're a bank CEO. If you could pick any other industry to try out on and try to do someone else's career, anything else you've always thought would be cool to do?
Oh, without a doubt, that's the easiest question I've been asked on any podcast.
Nice.
I would be in professional wrestling tomorrow if I was a couple inches taller.
Awesome.
I love the entertainment aspect. I love the show aspect. I love fun. I love getting people involved. I'm a little bit rough around the edges behind the scenes. So that would be, I'd be in professional wrestling tomorrow if I could.
Not the answer I expected out of a bank CEO. And that's absolutely awesome. I love it. So, Mark, how can people, get in touch with you? Is there anything coming up? Any type of events you got going on or anything like that?
Sure. We have a really active presence on LinkedIn. You can look up myself, Mark Ritter, Ritter, or look up our company, Member Business Financial Services. We always go by MBFS. The easiest way is to hop on our website, mbfs.org, and people can connect with us. And if we can't help you directly with our credit union network, we spend a lot of time trying to find other credit unions and organizations like myself around the country who can.
Awesome. And, one last question. Did I miss any good questions? Anything you wanted to chat about that we didn't connect on today?
No, I think you're good. I appreciate the time.
Awesome, man. Well, I appreciate your time. I want to respect your time. And, I think the audience got a lot today out of you. So make sure you guys connect with Mark. If you have any questions about small business lending or working with a credit union, you guys have the contact. Of course, we'll post it in the show notes. And of course, as always, if you find value in today's podcast, please go on iTunes, leave us a review, share with others, and share with someone else who might find impact in this podcast episode. Thanks again, Mark. We appreciate you coming on.
Thanks for having me.